Welcome back here with the Diwali special edition of Money, Money, Money. We are discussing all sorts of asset classes that maybe you can maximize your wealth in this year. So, Nilesh, your thoughts on everything beyond debt and equity. Do you see money being made anywhere else?
So, notional money can be made in many other asset classes, but we are talking about real money. So, my recommendation is that in real estate, it's the location which matters. And ideally, if you can pick up a commercial property which can be put on a rent, in that part of city where future city will be expanding. And if I have to illustrate it, if you had bought a property in Ballard Estate, Fort, Nariman Point, today probably you wouldn't be making as much money as you would have made in Bandra Kurla complex, because city shifted over there.
So the appreciation.
And in the meantime, you get your rental yield. So focus on the rental yield and focus on that part of area where city is expanding. I think that's the best way to make money in real estate.
Okay. We had an interesting conversation actually on property a couple of weeks back also on the show, where we had a property consultant come in and say, do not invest in real estate. So that was a bit of an eye-opener. But Gaurav, your thoughts in terms of real estate and as an asset class, will this coming year be any better than the previous one?
Difficult to kind of comment, but real estate as an asset class is, if it's from investment perspective, so not what is for self-consumption, is cumbersome to purchase, cumbersome to maintain, cumbersome to liquidate, and even cumbersome to bequeath. So be very, very careful before putting in that extra money. Also, invariably what happens is that one single large piece skews your entire portfolio in terms of weightage. So before looking at, and I'm not saying don't invest in real estate, the only thing I'm saying is be very, very careful. That should be the last on your priority. Once you have created enough assets, these are other assets are aligned to your requirements, there is enough liquidity, then consider, and as far as possible stay away from leveraging. People don't realize, but that also creates a lot of problem. So real estate, not when you are beginning a career or when you're creating wealth, maybe at a later stage, but then you're only looking at appreciation. Again, rental income should not be the main criteria. So be very, very careful before you're putting money into real estate sector.
Okay, Pradeep, in your experience, when this is an asset class that's completely bombed in the last couple of years, it's not offered liquidity or returns, do you see any of that turning around? What are you telling clients?
So we have a slightly different view around real estate. You know, if you actually look at the evolution of real estate now, it's primarily been a transactional asset class, right? Where people have gone and bought you've gone and bought primaries. There's a pre-launch happening somewhere. We've had clients who've had 15, 20 of these real estate, portfolios, and today they find it really very difficult to maintain. We are seeing progression of real estate from being a transactional asset class to actually a yield asset class over a period of time. More and more of our clients are really looking at consolidating their real estate portfolio holdings. So they do not want to hold 20 primary residential units, but actually then go and buy 2 good quality commercial office premises which can actually give you good quality yield. They tend to build a diversified real estate asset class where you may have a hospitality asset, you could have an education asset, you're having a commercial office space, and not just in one location because you're based in Bombay. You could be buying something in Bangalore, you could be buying another thing in Pune. So we are seeing, with the type of private equity and institutional money coming into real estate, this is actually going to move away from being a classic speculative asset class to a core asset class in many client portfolios. Of course, with REITs coming in, simplifying that for a lot of not necessarily the super HNI clients, but even many of the retail clients, to be able to offer a good yield proposition in their portfolio, which was so far only on the debt side, is going to be an important step.
Nilesh, your thought, because maybe the next 12 months will actually see this instrument finally take off, real estate investment trusts. Is it something in its current avatar and the way the market is it something you think retail investors should consider?
So investors should keep their eyes and ears open. It's quite possible that in order to popularize real estate investment trust, first few offerings are priced above the market. That's your benefit. But if those assets are not priced properly, then there could be serious trouble. I have seen in my individual capacity some of the rental yield assets where initially the rental offered is very, very high. In order to capitalize it at a much higher value than what is the market value. Now, if such kind of things are going to get repeated, then there's no point in investing, because what you make in a higher rental, you will lose far more in capital.
Okay, fair enough. Ashish, your thoughts. Real estate should find a place in the portfolio right
So,
now.
I mean, I believe that real estate as an asset class is really for the ultra HNI or the sophisticated investor for two reasons. One is, the size of the ticket. If you want to effectively diversify in real estate and end up buying some residential properties or some commercial properties, the amount of money that you need to lay out is quite large. So I believe as an investment, it's only for the sophisticated or the ultra HNI investors. Second, the process of due diligence is underestimated in real estate a lot of times, because most investors, they buy whatever comes their way. So, the hot pre-launch, or some developer who's advertising very heavily, and the agent lands up in your office and you go and buy that property. However, like Nilesh bhai just mentioned, even in a commercial real estate, there are two aspects. One is to look at the rental yield. The other is also to look at the absolute value of that asset class.
Right.
Because if you end up buying based on rental yield, then you can buy it at an inflated purchase price, which means for a long time you may get your rent, but finally when you liquidate your asset, you will not get any capital gains. So I think you have to look at both. But having said that, at this point in time, I think the commercial rental yield real estate part of the real estate business looks very interesting, and a lot of sophisticated investors are looking at building a portfolio around that.
Okay, all right. We'll take a break on that note. On the other side, we'll come down to some last thoughts. Which are the best asset class picks to look at, and some rules of investing. We'll have Gaurav give us some of those ideas as well. So we'll be back in a moment.